What's up, guys? Corey Hankerson here from Legacy Tax, aka the Levy King, and I've got some fantastic news that's going to make your day. You remember that $600 tax rule, right? The one that was supposed to hit in 2026, forcing apps like Venmo, PayPal, Cash App, and Apple Pay to report every single transaction over $600? Well, guess what? The rule is officially gone. Let's dive into what that means for you, starting with a quick refresher on the old rule and why it had so many people worried. Okay, so the old $600 rule, the way it worked was that starting in 2026, if you made more than $600 through apps like Venmo, PayPal, Cash App, those platforms were supposed to report those transactions to the IRS. The rule came out of the American Rescue Plan and was aimed at catching gig workers, freelancers, or anyone else making money but not reporting it to the IRS. It was supposed to target underreported income, especially for things like side jobs or freelance gigs. But here's the problem. It didn't just apply to business transactions. Even if you sold some old furniture for $700 or your friend paid you back for dinner, that could have been flagged as taxable income. The IRS would have required these platforms to issue a 1099-K, which would have meant more paperwork for you and more potential for audits and or penalties, right? It was a mess. And I know you don't need that type of headache. And so, I'm glad, you're glad, probably that this is all gone. So here's the big update. $600 rule is gone. Now, here's where it gets good. The big beautiful bill signed into law on January 4th, 2025 cancels that $600 reporting rule completely. That's right, it's gone. So no more worrying about getting a 1099-K for casual transactions like splitting a dinner bill with friends, right? So what's the new rule? The key change is that the new law eliminates the requirement for third-party payment platforms like Venmo, PayPal, Cash App to report transactions under $20,000 or with fewer than 200 transactions. That's a massive jump from the old $600 threshold. If you're like James, a freelancer who's pulling in $3,000 a year through Venmo, you're no longer on the IRS's radar. So you won't get a 1099-K and you won't have to deal with the nightmare of reconciling non-taxable transactions from your taxable ones. Pain in the butt. Now, as long as your total transactions are now under $20,000 threshold and you have fewer than 200 transactions per year, you don't have to worry about IRS reporting. But hold up, just because the rule changed doesn't mean your tax obligations completely disappeared. You still have to report your taxable income. So if you're earning money through those types of apps, it doesn't matter if you get a 1099-K or not, you've still got to report it on your tax return. Also remember that gifts and reimbursements are still non-taxable. So if a friend pays you back for something or maybe you get a birthday gift or something like that, you won't have to report that income to the IRS. Now, let's break this down with a few examples of how this plays out in real life. Example number one is Mike, who's a freelancer. Mike does freelance work on the side and makes around $10,000 a year through Venmo. Under the old rule, Mike would have been issued a 1099-K, but now, since his transactions are under that $20,000 threshold and below 200 transactions, he won't get any of that. But he still needs to report his $10,000 as income on his tax return. He's just not going to get a 1099-K. Example number two, Sarah runs a small Etsy shop and makes around $1,500 a month through PayPal. That adds up to right around $18,000 a year. Under the old rule, Sarah would have gotten a 1099-K. That included not just business transactions, but also any personal payments that came through the same account. Now, with the new rule, she won't get that 1099-K at all, since she's making less than $20,000 and has fewer than 200 transactions. Again, she still needs her business income, but she won't have the headache of dealing with non-taxable transactions mixed in with her business's taxable revenue. Last example, Jamal uses Venmo to pay his friends back for dinner. He occasionally sells some old electronics, and he does a couple of odd jobs for his neighbors, friends, and family. Under the old rule, if Jamal's total receipts exceeded $600, he would have received a 1099-K. even though most of his transactions were not taxable. Now, unless Jamal exceeds $20,000 under the new threshold, or he has more than 200 transactions, he won't get a 1099-K, and he won't have to worry about the IRS reporting. But he still is going to have to include whatever taxable income that he earned on his tax return. You still got to include an income. You're just not going to get a 1099-K, and it's not going to be reported to the IRS. So the bottom line, this is a big win for taxpayers. The new law targets actual business activity, not just like casual users and casual transactions between friends and family, stuff like that. That was a mess. Now, whether you're a freelancer, a small business owner, or just someone who uses payment apps to split like dinner or bar tabs with friends, this change makes life a lot easier. If you found this breakdown to be helpful, make sure you're subscribed to my channel. You hit that like button and smash that notification bell. Legacy Tax and the Levy King is here to help you stay informed on all the latest tax law updates. And if you need help with tax planning, tax preparation, or owe back taxes, click the link below to get a customized tax plan before the year ends. Take control of your taxes with Legacy Tax and the Levy King. I'm here to help you get it done right.